Good afternoon. This is the video newsletter for buysellshort.com for Sunday, December 28th. Hope everyone had a happy Christmas. We've got another holiday shortened week this week. Market will be closed on Thursday for New Year's Day. We also have tax loss selling this week for traders who, are a little bit confused. The last day to sell for a tax loss for 2008 is Wednesday. This 3-day settlement rule has nothing to do. It's the actual day you sell, which is Wednesday. So probably going to be a busy couple of days. We'll be keeping our eyes peeled for some opportunities if there is any tax selling in stocks. So keep your eyes peeled for some nice bargains because stocks that usually get hit in the next couple of days bounce back big in the first week of the new year. Here we have the Dow 15-minute chart. As you can see, we've just completed our second bullish falling wedge in the 15-minute time frame, and we've been consolidating nicely. So hopefully we should see over the next week or two a move back up to that 9K resistance area. Daily chart, a couple of green days on the daily chart here, but no real volume. The holiday sessions in play, so we'll get a better idea where we're going over the next couple of days. SMH, same thing. We're still in that bullish or bearish rising wedge support 1659 right now. VIX continues to ease, which is why we've seen the volatility just disappear in the market, and that is frustrating the shorts and bears quite a bit. But it's really good for swing traders like us because as the market stalls, actual stocks have been moving nicely because a lot of the panic has been taken out. US dollar, huge bounce week ago, been easing over the last couple of days. We'll be keeping an eye on this. Usually when you see a head and shoulders breakdown like this, you at least see a test of the shoulder again. But let's see what happens there. We've got a lot of traders calling the bottom in oil. We've been hearing them call the bottom in oil for the last 4 months. I guess they'll be right eventually, but we'll be keeping an eye on that. Likely the selling should continue over the next couple of days. Tax selling should be especially evident in oil plays and oil ETFs. So we'll be keeping an eye on that. But we're sticking with our cash-rich plays. Quick mention, GTCB, we sent a trading alert out on this one at 20 cents on Friday, and 45 minutes later, we had a 50% winner. Cannot argue with that. As I mentioned in the trading alert, these guys have an FDA panel meeting January 9th, so we'll be looking to accumulate this one 20-cent area on any sharp dips for that meeting because a lot of biotechs have been going up massive into FDA panel meetings recently. Chart looks really, really good here. They got financing from one of their major owners, so they also should be motivated to pump this stock up over the next couple of days and make their holdings appear larger than they actually are. NRGN, $42 million in cash, ridiculous market cap. We're sticking with these penny biotech plays that are cash rich. They're just ticking time bombs here, ready to go off at any moment. So that's why we're sticking with these. LVWR, similar thing, cash rich penny stock. TELK, again, $65 million in cash, ridiculous market cap. Target 60 cents plus on this one. New stock to keep an eye on here is NUVO. It's another cash heavy biotech. They've got 60 million plus in cash with a market cap of 16 million. This one, we could easily see a move to 50 cents on this one, so I'd be adding anywhere around the 30-cent area. EGHT, this is one of our January popper plays. The last 3 years, from December to January, this stock has averaged a 50% gain, and this year they actually are making money. So target on this one is a move over the 50-day moving average up at the 60-cent level. Zone, another cash-rich tech stock, huge insider buying recently. Target on this one, 20 cents plus. NEOL, another biotech. We had a huge run a week ago. It's retraced back now, and this one we're looking for positive news in the next few days, and if recent action in biotechs with positive news has been any indication, we could see a massive move higher on this one. Kirk's Another cash-rich biotech. Again, that is the common theme, cash-rich penny stocks right now. At least we know the bottom in these, and they've been throwing off some massive winners over the last couple of weeks. ETFC, E-Trade, this is a play on getting TARP money. TARP money started to flow again last week. These guys have been retraced lower on reduced volume over the last week, but over the last couple of days seems to have found a bottom. If I was to put stops here, it would be at 1, and target again is a move to the 50-day. That's at 149 right now. Breakout is a close above the 20-day exponential, so we're looking at $1.21 as breakout on this stock. ASTM and STEM stem cell stocks should do very, very well into January with the Obama swearing in. STEM was very strong on Friday, and ASTM was nicely higher but got painted down at the close. I would look to add to this stock anywhere under 50 cents. Target remains a move to the 70-cent area on this one. If we flip over to STEM's chart, you can see this one's getting ready to go on to another power move here. I would look to add this one on any dips under $1.30. Once we clear $1.50 on this one, we could easily see this one run pretty quickly to the twos, just like it did back in late October into November. Chart looks really, really good here. Stochastics, unbalanced volume, ADX continues to get very, very strong, and that's what we want to see in strong stocks. We want to see the indicators get even stronger. RFMD, just another one to throw out there, might be worth keeping an eye on for any tax loss selling dips this week. Has a double bottom at the 70 cents area, and in early January, this is the kind of stock that could easily make a 25% move up to at least to the resistance line at $1. So again, we've got our cash-rich penny stocks that we're just patiently sitting on. We've got a couple of them popping every few days, so we've had some very fat gains over the last month, and we're going to stick to that strategy. Dow breakout. Right now we're looking at 87.50 as the downtrend resistant line, but really would not be clapping and high-fiving until we close above 9K on the Dow. For the next couple of days, we're really going to be focusing on looking for stocks that have tax loss selling and ridiculous dips to pick up and sell the inevitable bounce back in early January. We should see some nice moves into middle to late January this year. At least that's what I'm thinking the market is setting up for. And as for, the tax loss selling, there really shouldn't be much except in sectors like oil and energy stocks that, traders had huge gains and now have huge losses. Most traders, for the most part, have no real gains this year. So, any tax loss selling pretty much should be out of the way right now, but there's always a little, and then there's always a little bit of manipulation. So that's what we'll be looking for. Their losses are benefits. So keep your eyes peeled, and I will see you guys in the chat room tomorrow. Goodbye.